is unbelievable. Since gold has been hitting record highs, and I look at the two main newspapers in Canada, and I look at their business sections, and I have only seen one article in the business section that has the word gold in it, and that wasn't even gold hitting record highs. So, once the press starts catching on to the story, I think that will start waking investors up. Right now, someone sent me a chart the other day. Right now, 1% of global investment assets are allocated to gold and gold miners. In other inflationary times in the past, let's say in 1981, I think that number was 25% or 26%, something like that. In 1928, it was 30%. So there's so little allocated towards the gold sector. And at some point, that's going to change. Even if that 1% were to double, that still represents a tremendous amount of buying. So why do I think that's important to us? Look, these majors have to replenish, not just replenish their depleting reserves, but grow their reserves. And while there's lots of money being spent on exploration, there aren't many new discoveries being found. First Mining is in the enviable position of having several large multi-million ounce projects in great jurisdictions. And I can talk a little bit more about those, but these are projects that I think would be of great appeal to some of these majors, whether they want to get involved or try to buy them or whatever. It puts us in a great situation. The other thing is our stock price is, in my opinion, significantly undervalued. Our projects have incredible leverage to the price of gold. In fact, every $100 that gold moves up, the after-tax net present value moves up by a total of $250 million. Now, our current market cap is, in Canadian dollars, about 130 million. So, and by the way, those when we did our studies, our pre-feasibility study, we used a price of gold of 1,600, and for another project, the Duparquet project in Quebec, we used 1,800. And even at that level, we're currently trading at 0.1 times net asset value. Historically, that should be between 0.3 and 0.5. So just leaving those gold prices as is, in the studies we did on the Springpole project, the pre-feasibility study that we did, we announced that back at the beginning of 2021. And then our preliminary economic assessment that we announced in September of 2023, we used a price of $1,800. So if you were to adjust the 0.1 times net asset value up to what is a historic norm, 0.3 to 0.5, our stock price should be much, much higher. If you adjust that even further to reflect the current gold prices, it's like significantly higher. So that's why I think our company, our stock, has unbelievable re-rating potential. That's the term we use in our corporate presentation. I like to use, and this is probably me being an ex-stockbroker, I like to use the term potential for significant appreciation or capital gains. And, what's going to move that? Well, a bunch of things. We got to have money coming back into the sector, and I think we're on the verge of turning. I think gold for the last couple of years was facing headwinds by interest rates being pushed up in the US. That gave lots of headwinds. Then all of a sudden, that stopped. Rates stopped going up. I think the central banks, especially in China, were buying gold like there's no tomorrow. That was pushing the price of gold up. And, we went up to 2,400 and now we're back down to 23 and change. And something else I should mention is the resilience of gold is phenomenal. Every time, in the past, every time I had a good day, it seemed to have got clobbered the next day with the Fed coming out with news that was just bearish for gold. Now, it's the opposite. Gold moves up, it has a down day, it picks that back up the next day and a little bit more. What do I think is going to take gold to the next level? I think when we start seeing even just the mention by the Fed of, inflation's under control, rates are going to start coming down. And I think that takes gold to the next level, maybe 2,500. And who knows? Listen, maybe it gets to the levels that some people laugh at, 3,000. But I would say even at 2,500, even the press has to start noticing, reporting that. It's just absolutely absurd. And I think these are some of the most incredible, so what I call the macro catalysts. Actually, I divide catalysts into three categories: macro, which is the price of gold or the state of the sector; operational catalysts, which can be things like drilling results or, news on the permitting process. We're currently, as you know, permitting a spring pole project. And then what I call the unexpected catalysts. These are catalysts that, when I was a stockbroker, it was just wonderful. When you go into the office, the market opens, and the stock that you thought had 20 clients, and all of a sudden they managed to strike this big contract, or in the case of a mining exploration company, they've hit a massive goal and the stock goes through the roof. So, what sort of unexpected catalysts could I see here? Who knows? Maybe we get a big strategic investor that looks at us and says, hey, we've got to own that. This is a company with two large projects, one of which, both in great jurisdictions, one of it which is at the tail end of the permitting process. And it looks like there's, some light at the end of the tunnel. And I think if we could see something like that, then the stock just takes on a new life. And sometimes these things happen overnight. You can try to predict what the catalyst will be, but it's just gonna happen.
It happens when you least expect it. You talked about ridiculous gold price predictions, and you mentioned $3,000, what some people think is ridiculous. I think it's important to point out that Citibank, one of the biggest financial companies in the world, has a $3,000 prediction for gold sometime in 2025. So these numbers that a lot of people call ridiculous, I mean, think about back, let's say in October just of last year, Paul, we would have thought that $2,300 gold, a lot of people would have called that ridiculous. But for a May 2024, that if we had told investors back in October of last year that in 6 months we could have a $2,400 gold price, they would have said, oh, you're crazy. That'll never happen. So I think with all the macro factors that you described, and that things have changed, that we could be moving into an environment where we do hit these numbers in the gold price that in the past may have seemed a little far-fetched. I want to ask you a question, because you also talked about the resilience of the gold price as of late. And I'm noticing it. I'm sure our viewer is noticing it, but it's real, right? Like you said, the price gets beat down. It seemed like a year ago, 2 years ago, the gold price would go up and then it would get beat down even further, and then it would go up, and then it would get beat down. I think that's like what most people call a bear market. Would you say now that it's very possible that we're in a bull market where the price of gold goes up? Sure, like we've had the last few weeks, it gets pulled back to 2,300, but then it continues upward, pulls back a little bit, and continues even more. I heard Keith Neumeyer talk about that 10-year bull market from '02 to 2012, and that's kind of how he described it. Like the price of the metals would go up, we'd think, oh, it's over, and then they would come back down, but then they would go to new highs, and then the same thing, they'd come back. Is that maybe what we're going through right now?
Yeah, I think so. There's still, I think you've still got factors like the central banks buying like crazy. That helps. And I do think that a lot of investors do feel that interest rates will pivot at some point, that there's no more pressure for them to go up, that there's more of an inclination for them to drop. We've seen some horrible inflation. God, I was out for dinner last night, and a mediocre meal that cost for me and my friend, it cost, over $200. It's nuts. I would have said that same meal before COVID would have been 150 tops. It's nuts. I really can't see inflation worsening. It's been tough enough already, and I think households are having a tough enough time. Well, as our businesses have seen their input costs go through the roof. So I think just the market moves in expectations, but future expectations, and I think maybe rates coming down might be built in.
Well, because can the Fed really raise interest rates at this point? We have a record amount of government debt, a record amount of corporate debt, and a record amount of consumer debt. I don't think that any of those categories have much more bandwidth or ability to absorb interest rates going much higher. It would kill the consumer. It would kill corporate profits, because these big corporations have to roll over all this debt. And of course, the United States government has $10 trillion that whatever in the next 18 months they need to refinance. I don't think that we can raise rates, but if we lower rates, which is the more likely scenario at this point, that will feed even more inflation. And what do gold and silver, for that matter, love more than anything is that inflation, or even more so, a stagflationary environment, which a lot of people think we're already in right now.
Yeah, no, listen, I agree. And I think that's, as I said earlier, once we see rates start to come down, I think you see, gold move significantly, silver as well. And, I'm obsessed with mining stocks. A lot of my portfolio, probably way too much.
Same here.
is invested in gold and silver. So I'm rooting for much higher commodity prices. I think it's gonna happen. We haven't seen yet the generalist investor come back in. They're still into all these high techs that are trade fantastic companies, but the multiples just kind of make your head shake a bit.
Yeah.
There will be a rotation. You do get some people say, no, the cryptocurrency is the place to be. I won't express my opinion on cryptocurrencies, but I think just mentioning that suggests my opinion. But gold has been around for thousands of years. It's been a phenomenal investment. And even long term, you look at even like gold mutual funds over the long term, they have all done very well. The problem is we've probably been, like I was a stockbroker, as I mentioned. It's gold. The metals are cyclical. This has got to be one of the worst cycles I've ever seen. And I think when it turns, I think we've got a lot of catch up to play, and I'm kind of a lot of catch up to see. And I think we could be in for a bit of a mania where, prices go crazy. And I'm looking forward to seeing some valuations that people say, oh, it's a little rich right now. I'm looking forward to that.
So you just said that in your years that you've been following this sector, that this is about the most challenging environment that you've seen, or it at least matches any of the previous challenging environments that you've witnessed for the mining stock. So is it safe to say that the pendulum, right, has swung so far to the negative sentiment side that as it starts to swing back, I think I heard you say it may overshoot. We could get into a mania environment. And I want to also ask your opinion on this, Paul. The sector is so small. The market cap, when you look at the statistics of all the precious metal mining stocks added together, are dwarfed by the market cap of some single companies like Apple or Microsoft or even Home Depot, for that matter. That just a little bit of money coming into the sector can have a major impact on the prices of the exploration, development, and even the producing companies.
Absolutely. I mean, look, I mentioned this earlier. One of our good supporting investors sent me a chart showing how much is currently invested globally in gold and gold miners. It's 1%. Mm-hmm. That's, whereas in 1981, it was over 20%.
Yeah.
Even if we went to 5% right now, that represents a massive, massive amount of buying, both to the producers, developers, and the exploration companies. And one thing I should mention, even at $2,000 gold, the the producers were making unbelievable amounts of free cash flow.
Yeah.
Even though we've seen inflation and their costs have gone up, at 20, I don't think they've gone up as much as the price of gold. At $2,300 gold, their free cash flow is just unbelievable. And I think we're going to start seeing some more M&A activity. We're seeing it a bit already, but they're going to have to do something with that cash, and they're going to have to get, I think, a little more aggressive in looking for ways to replenish their reserves. And I have to tell you, honestly, I'm an investor at First Mining. I work with First Mining. We've got a couple of projects that I think make great sense, or are of a potential size to be meaningful to those companies. A Springpole project, it's slated. This is one in Northwest Ontario. According to our pre-feasibility study that we released in early 2021, we scoped that to be produce over 300,000 ounces of gold a year at cash costs, all in sustaining costs, in the lowest quartile of the industry.
Yeah.
That is huge. And this project is going currently through the permitting phase. This is a phase that any mine that gets built has to go through permitting. That's definitely not unique to us, but we're in the advanced stages of permitting. We submitted back in the middle of 2022 a draft environmental assessment document. This is a 10,000-page document talking about everything: the mine plan, tailings, reclamation, and very importantly, the environment and the fish habitat and the caribou studies and wolverine studies. We submitted that, and the regulators came back to us with, I think, about 1,600 comments, questions, and none of them were showstoppers. And those comments and the answers to those questions are being formulated into a final environmental assessment, the final document that we're planning on submitting later this year. And from, once we submit it, it should take maybe a year and a half till we get approval. Obviously, we're working with the indigenous communities in the area, and we've got to make sure that they are, the plan is acceptable to all parties. Obviously, the potential benefits to everyone are huge. So this is very exciting time. This is a project that is in the advanced stages of permitting, and there are only a few. I think I can think of one other company that has a project in Canada with similar size to us, close to permitting approval, which we should hopefully get before the end of next year. And it's exciting times. So I think with all that said, it makes us very attractive to.
Whoa! But wait, Paul, there's more, right? There's a huge project in Quebec, the Du Parquet project as well, which you mentioned earlier. But can you give us a little more color on what's going on up there and the prospects?
Yeah, this is a project. When Keith founded the company, founded First Mining back in 2015. He acquired a company called Clifton Star that had 10% interest in the Du Parquet project. The balance was owned by primarily a group, a small group, a family. It had been in the family for years. We finally acquired that balance of 90% from them. So we now own 100% of this project in probably one of the most sought after, prolific mining regions in the world, the Abitibi region of Quebec. What mines are close by? Well, Nico Eagle's Malartic and Detour. These are massive mines. We're very close by. We did a preliminary economic assessment. We released it in September of 2023. Also, robust economics. Slated to produce over 200,000 ounces a year at all-in sustaining costs of less than $1,000. Very, very exciting. And we're looking at some other potential situations there that could also be quite exciting.
Because is it accurate to say that there's some excess milling capacity in that region as well?
Well, yes, there's definitely some mills there, and we're quite frankly looking to see if there's a way that we could take part of the ore, maybe higher grade ore, and rather than go through the whole immediate construction of a mill or processing plant, that we actually can take some of that ore and toll mill it, have it milled at one of these other mills in the area, of which there are quite a few. So that's an exciting, what's the word, potentiality.
Sure.
And so the fact is, this is a company with two large flagship projects. And sorry, I should mention that with Du Parquet, it's a multi-million ounce project. We are drilling there right now because we feel that there is potential to find quite a bit more gold.
And there was a massive amount of drilling already on that project from previous operators, is my understanding as well.
Yeah, there was, I think, 270,000 meters.
Yeah.
And
wow.
Yeah. But so it's a really interesting project. And the other thing is, like, infrastructure's right there. You just drive right up to the project.
we've been there. And I think it's also important to mention that this is an area that's very accustomed to mining. There's a lot of infrastructure in the area. This is not a greenfield type. I mean, it was a past producing mine at the site. So it's more likely that the community will be, even more excited about the potentiality of mining occurring there again.
No, listen, absolutely. And, this was, I think it was mine from the 30s to the 50s. At one point, I think it was the largest gold mine in the province of Quebec. There are a couple of, some environmental legacy issues there, which, if we build a mine or we start mining there, part of the development will be cleaning up that environmental legacy, which I can't imagine that would be opposed by any of the, what do you call them, the town folk.
Right. Yeah.
So it's lots of positives, and as you said, phenomenal infrastructure in the area. So look, great company. I've got a few companies that I own, particularly with I kind of sometimes, if I wake up in the middle of the night, I think about them. This one, I don't. This one does not keep me up at night. I do not lose sleep over this one. And just to summarize, great projects. One that is in the advanced stages of permitting. Sizable projects in fantastic jurisdictions. Management with a great track record. We have cash in the bank, but we have sources of or potential sources of cash to help us continue to advance the work. I think the potential appreciation from current levels is huge. And I explained that before. We're trading at 0.1 times net asset value. Historically, that should be 0.3 to 0.5 for a developer. That's assuming much lower gold price assumptions. And if you just raise to current prices, that goes even higher. It's at a time when I think the sector is on the verge of turning. Our stock price has not performed well, not unlike the stock price of many, if not most, other mining companies over the last number of years. Down. We're starting to see a little upturn, and I think it's really exciting when people look at a stock price. They, oh my God, what's happening? Why?
Well, the stock price performance is not unique to the sector. The whole sector has been beat down, and all of this is occurring in an environment where there's kind of a tale of two cities. We have sentiment for gold as a physical investment on the rise in the world. We have the world central banks. We can't forget that, right? Buying gold like never before. So we have that up here. And then down here, we still have the entire precious metal mining sector, which is suffering from a bit improved, but still very challenged sentiment overall. This difference has to be rectified. And I think most likely, most people that I talk to, and I think if you apply common sense to what's going on in the physical gold market, it's more likely that the mining sector in general will rise up. And that could be great things for companies like First Mining Gold and the entire sector in general. It could be a very lucrative and exciting time period for people who are willing to see the capital appreciation potential within the whole sector and within companies like First Mining Gold.
No, absolutely. And I think when it turns quickly. People suddenly shake their heads and go, oh my God, you know what? Honestly, the potential The potential is huge. It's tough for people to get in at the bottom. It's tough to be a contrarian investor. You could look at something that's been going down, down, down and say, oh, company's going broke, or the business, in the case of an operator, a different business, oh, the business is going broke. It's tough to be a contrarian, but, and oftentimes investors miss the first 20%, 30%, 100% appreciation. But, I think what people want to see is a little bit of a curve, curl up. And our stock price has been down, 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 but it's starting to curl up. The sentiment is starting to improve. We haven't yet seen, as I mentioned before, the press coming back into, following the gold story. And, wouldn't it be nice to see a headline that says, gold hitting new highs, maybe time to consider raising your allocation to the sector, as opposed to new ETF formed with NVIDIA and great companies.
Right.
I use some of their products.
Maybe, Paul, maybe the headline will say, artificial intelligence predicts precious metal mining sector to be the hottest sector over the next 10 years, right? We can incorporate the two together.
Fabulous. That will put a smile on my face, but I smile anyway. But listen, I think I do think we're in for some exciting times. Yeah. I'm the sort of person, I'm an investor. I've been an investor since 2015. Mm-hmm. I want to see higher prices. My aspirations are very high. I mentioned, how First Quantum, the big copper producer that Keith founded, that was a lot more than a 10 or 20 bagger. Same with First Majestic. My aspirations for First Mining are significant. And all I want to do, I speak to investors, because fantastic investors, and I encourage anyone who's viewing this to contact me, because I will get on the phone or, arrange a video call to go over, more details. But I want every single investor to, ultimately make superb returns. Yeah. And quite honestly, especially for investors who've been in this company for a long time, at the end of the day, when they ultimately sell, I want their returns, their average annual compounded rate of returns, to be of a sufficient level that it more than compensates them for the years of suffering in a sector that has just not moved.
Yeah. And it's been the whole sector. I think there's bright days ahead. Paul, on behalf of our viewer who joined us today, again, I want to mention Paul Morris here. He is the Director of Investor Relations at First Mining Gold. I will have a link in the description below with his email address. He's happy to talk to you about the company, about the sector, about the opportunities. Paul, again, from all of us, thank you for sharing your insights, not just into First Mining Gold and the opportunity there, but in general, what you've experienced during your career, following closely what goes on in the mining sector, in the precious metal sector, but even where you see us sitting right now, because I do think that we're on the precipice of some really great times for the precious metals and for the mining sector.
Yeah, and I keep my fingers crossed, but that's not an investment technique. But listen, it's great to see you. And please, I encourage people to contact me, send me an email. I will get back to you. And, if we can arrange a phone call or a video call, as I said, and I'd love to tell you, the story in a little more detail. So
sounds great, Paul. Thank you. And we'll look forward to talking to you next time.
Terrific. Thanks, Rob.